Good morning all, I hope you are well and welcome to this morning's video. So I have just the one pair on watch today and that is West Texas Oil. I've just taken the other three pairs off of watch that I had on watch yesterday because they still look like they're likely to shape up. They just look like they're likely to take another 24 hours to do so. So as we know, trading is mostly about or largely about patience. So I think in about 24 hours' time, many of these setups may be close to being ready, just not possibly by the end of the day. Some or one or two might be ready by the Asian session tonight. So I'm just going to let them do their thing in the meantime. But West Texas Oil looks a little bit closer to being ready, so I'm just going to keep this one on watch. I do have alerts set on those other pairs just in case they shape up a little bit more quickly than I was anticipating. We don't always know when things are going to happen in trading. We don't even know if they're going to happen at all a lot of the time, but we can just use our experience to make an educated guess and have our alerts set and be ready to execute when these entries shape up, if indeed they do. So West Texas Oil, I am looking at this because on the higher time frames, this is you can see the psychological patterns that we look for. Here we have this low here, okay? We have this last exchange of liquidity, right? Where price was exchanged, okay? There was an exchange of liquidity here, price moved to the upside. What happened? If we look at what happened here, we have a move here, price gets close, but doesn't quite tap into it, okay? There would have been a lot of FOMO here, okay? People would have been waiting for it to get to this exchange of liquidity, knowing that that's where they should have been waiting for it to get. It starts to move. Now, of course, you could have made profit in here, but if you're always trading the FOMO channels, then potentially you're capping your profits. And often, if price doesn't quite get to an area, price will start to move up more like this, right? Rather than moving like this. And obviously, if it moves up like that, it's going to be harder to manage potentially if you find trades along the way. Okay, so if we're not trading with these FOMO channels, if we're trading when price actually gets to an area, it's more likely to be aggressive once the move does actually get there. Okay, and you might be thinking to yourself, well, here we tapped into the area. Well, that's true. And you might be thinking, well, that was corrective as well. That moved up quite correctively as well. Well, one of the reasons that that likely happened is because on the higher time frames, we typically break below the area before rallying to the upside. Okay. Many people, you got to remember, for the bigger players who would have been looking at this last exchange of liquidity, many of them would have been waiting for it to dip below, or they would have had their orders set just below. Okay, so it's no surprise to me that once again we move up very correctively there, because likely the orders that are down there, likely just below, and that are being placed there are being are dragging price down. And a further clue was this impulsive move there. Okay, that was another clue that there was orders being placed down there. So what happens? We break below, okay, bargain area of value for a buy, not resistance, as many would believe. And you can see that here from this, as I mentioned yesterday, this candle here, many people would have thought after this red bearish weekly close, this is a retest to get short. Okay, well, okay, where is it going short to? The bigger players are trading with some kind of plan. Now, the question I always ask myself is, if they are getting short here, where are they getting short to? If you're an investor and you're looking to long-term hold, I would be wanting to know before I invest where I'm actually looking to get out. Well, there's nothing on the left, okay, once we broke below here. So where would they be looking to get out? So that gives me a clue that this is just people getting caught the wrong side of the market again, and that price will rally to the upside aggressively. Okay, let's get those off the chart. And sure enough, look at the move. Look at this move here, how impulsive this is. Impulse, correction, continuation versus this move and this move, okay? That's because we've tapped below, we've washed out all the liquidity, okay? So because there's nothing now dragging price back down, price is free to move more aggressively, more impulsively to the upside, okay? And we see similar I'm just going into a bit more detail of the psychology of the market just because I have just the one pair on watch, okay? And we see the same thing here, okay? We sell off, but we haven't really sold off from anywhere, okay? Yes, you got this tiny little point there, which is probably more visible on the lower time frames. We do sell off aggressively, but we come back up. We sell off. It was aggressive, admittedly, in this instance, but we keep being dragged. Price keeps being dragged back up, okay? Now, why is it being dragged up? Likely because there's still liquidity here, okay? Up here that needs to be tapped into. These are near misses. This is what happens when price gets close to an area. So once we washed out all of the liquidity that was down here and price started to move up aggressively, it's likely that it's going to move all the way up to this area, tap into this area that it near missed to, and then move to the downside aggressively. There's other things that if we just look at this, if we just looked at this on the monthly, why did price come back up? We can't know everything that the market does. Many people are trying to, explain every little tick of the market. Well, we're never going to know that because there's always unknown variables at play. But what we do have here is we have this bullish candle with a big green wick above it. We did wick above this area, so there's not necessarily a need to come back up to fill that wick. However, when we do have these green bullish candles like that with a big green wick above them, often these wicks will get filled, which is likely why price came back up and filled 70 to 80% of that wick before moving to the downside. Okay, so we can't know everything, but there's things that we see repeatedly which we can say, oh, okay, that's why that happened. But it's not for us to try and explain everything. We don't, as Mark Douglas said, we don't need to know what's going to happen next in trading to make money, and that blows a lot of people's minds. And they're like, how can you make money if you don't know what's going to happen next? Well, how could you possibly know what's going to happen next? How could you know what every single person is going to do all of the time? Many people on TradingView claim to know exactly what the market's going to do, when it's going to reverse, where it's going to reverse from. Absolute poppycock, okay, to use a polite term. There's no way that anybody could know that. What we do see is repetitive human behavior in the form of patterns, okay? So, and what I see here is that we have this impulse correction continuation to push lower. What do we have here? We have a sharp move down followed by a sharp move up. We have another sharp move down here followed by a sharp move up. Okay, these sharp moves are usually indicative of a lot of liquidity in these areas. So if we come back, so if price comes back into this area, for example, taps above these sharp moves, there was a sharp move there followed by a sharp move down, bearing in mind we're on the weekly chart, then it's likely that the move from these areas will be aggressive because the sharpness is often an indication of how much liquidity is there. So what I'm seeing here is a potential impulse correction continuation to push lower to take out this near miss to this low, and this near miss to these sharp areas here. Because they're sharp, price will likely be dragged back down. Okay, and the other clue is that we've moved up here in a non-progressive fashion. Okay, and if we just measure this is what I did yesterday. If we just measure this impulse here, measure this, so impulse down to where it stopped. Okay, and then we measure that to there. If this was an impulse correction continuation, the legs are often of a similar length. That would actually take us down to just below this low, which just so happens to be the start of this structure, the base of the structure. So that makes sense contextually as well. And then potentially, on the higher degree, we could then see a reaction from there, okay, break just below there, catch people the wrong side of the market, and then push up to take out that high because that was a sharp move, and then we would have this. Okay, we would have that structure. It would be fairly parallel, and then this would be the middle section within it. Okay, so we can see a lot of these things ahead of time. Okay, we don't always know what's going to happen, but we can see a lot of these things ahead of time. So if I just zoom in a little bit, get rid of that. So what I said last week is that you could see this wick here. We had a big green candle there. We wicked above it and then closed beneath. That was a clue for me that we'd likely washed out some of the liquidity and that would likely push lower. I said that in yesterday's video. And here you see the same thing again. Okay, non-progressive price action leading up to here. We have a near miss to this area. We have a near miss to both of these highs. So it's likely that price will come back up, break above, and then move to the downside. Okay, and what happens? We push to the downside. Okay, so just looking for the same patterns that we look for over and over again. Now you can see that this candle retraced over 50% of the length of the body of the previous candle. So this is a daily retrace. That's a big tick in the box, and you can see we're getting some momentum coming in now. Okay, the last leg has momentum. That's not a surprise to me either, because that's typically what we see. Okay, and I said yesterday, if we just measure the impulse from there to there, oops, that's a bit short, and then we assume that the leg out of it is of a similar length, that implies that this impulse correction continuation is finished. So when we see a 1, 2, 3 that lines up with an area of value, particularly if it breaks just above, it's likely we're moving to the downside. There was something that wasn't quite as typical, which was not everything about this is textbook. So we have this kind of larger correction. That's not typically what we see if we're going to move to the downside. We don't normally see larger corrections like that, especially ones which pull back, about 75% of the move. So that's slightly atypical. But you can see now we've dropped out of that pattern. Okay, we're well and truly cleared the low of this. So I'm satisfied at this moment in time, unless the market shows me otherwise, that this is not a, let's say we got some little correction under there, you could easily be tagged in and tagged out, and then this forms some kind of larger structure like that to push higher, because this move down started with a larger correction, which is not typical. Okay, so I'm just factoring in all the variables, but what we can see is we've left a little bit of a footprint there. Now the corrections on I thought this was Aussie Kiwi for a minute. Do excuse what I was about to say. I thought I was breaking down a different pair, but we've kind of got a bit of a footprint there. You can see that the impulse down kind of stalled here, and then we started to leave these little footprints, and price went from a correction into another correction, which formed above the low, and then we have this little correction here. Okay, so it's kind of stalling, and I'm just seeing, given the proportions of the impulse down which has preceded these, I'm seeing this as a potential structure that looks a little bit like this. Okay, just a little bit like that. So what we may get here, which is why I've got an alert set just below the start of this correction. Again, this may not be ready by the end of the day, but I'm seeing this as a potential. Given the size of this impulse down, I'm seeing this as a potential 3-touch structure like that, or perhaps something like where we get that little inflection point there, and then we get this little 3-touch structural approach. If either of these things happen, then I'll be looking for a risk entry within the flag, as I've illustrated here. So if 3-touch 1 hour continuation, or 2-touch 1 hour continuation with a 3-touch structural approach, which I just demonstrated, then I would drop down to the 15-minute chart, and I would look for entries on that time frame. We might even get one on the 1 hour chart, but as a minimum, as a lowest possible time frame, the 15-minute chart would be what I'd go to, and then I'd be able to manage it down to the base of this little consolidation there for something in the region of 2.5%. And if we broke that, the next inflection point would be there for something in the region of 4.5%. And then we have the bottom of this range where, given how much volume has given how much volume has been built there, I would anticipate some, even if we did keep going, as I said in yesterday's video, I would anticipate some profit taking in this area. So personally, what I would do is I would be looking at that as a target, and I would measure it from range to range. So the range being that area of value there, I would measure it from there to there. Okay, we got the wrong tool on the chart again. Let's try that again. So I've used the Fibonacci tool, measure from there to there. And because we have a sharp area there where price might pull back steeply, we can often, at these 90% areas, pull back quite steeply and pull back like 50% of the move, and obviously that would be a lot of profit potential left on the table. And it doesn't even mean to say that price will necessarily commit from there, okay, as well. That's the other thing to factor in. What I would do is I would set a take profit at this low, okay, and then I would trail my stops to the downside accordingly, and then we would have something in the region of, we just take that off, something in the region of 9.5%, or actually, if we just measure that to there, something in the region of 8% to work with. Absolutely, that would be a phenomenal trade, and that's what I'm going to be looking for today, folks. I hope you've enjoyed this video. As I said, I tried to go into a little bit more detail than normal. You can see just price stalling there at the minute. So again, this may be another one that is not necessarily ready by the end of the day, but who knows? If we get a bit of a sharp pullback, let's try that again. If we get a bit of a sharp pullback from here like that, then maybe that, it may be shaping it. This entry may shape up a little bit more quickly than I was anticipating. So we shall see. Hopefully you enjoyed this video, folks, and I will be back tomorrow in the next video, most likely if I have a pair or pairs on watch. If I place a trade on this, if it shapes up, I will obviously update you with that as well. Have a great day, and I'll speak to you again soon. Thanks for watching.